welcome. You're watching Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me is Cheryl D'Souza. And viewers, this is the show where you get all your stock-related queries answered by the experts. And we'll also have an interesting topic focusing on the metals onto the Buy Now, Sell Now lens. We'll discuss all that in detail. But before that, let's have a look at what the markets are up to. So Cheryl, once again, the market seems to be drifting in the red. But the respite is that the selling is not that brutal.
Absolutely, Shrishti, a very good morning to you, and I'm also hoping that the markets actually favor the birthday girl in today's trading session. As you can see, today Shrishti is wearing green, and also it's her birthday. So hoping the fact that markets take some cue from that and actually reverse these losses and go in the positive territory. So on that note, actually from the entire team of Buy Now Sell Now, very happy birthday to you, Shrishti.
Thank you so much, Cheryl. But believe me that once you get old, there's not much excitement left about the birthday.
We will talk about that tomorrow, definitely, about how the birthday was. But for now, let's take a look at how the markets are and how they're trading. And like Shrishti said, yes, subdued trading session coming in for the benchmark indices, but it is the mid-cap index and the small-cap index that's outperforming the benchmark. So remember, in yesterday's trading session as well, you had the broader markets that were holding on to some sort of a shade of green, to put so. But let's take a look at which are the sectors of the stocks that are gaining in trade today. Key to note that Bharti Airtel is the one that's shining bright in trade today. You had Macquarie that came out with a note on the entire telecom space, putting their bet on Bharti Airtel. Also, you had Indus Towers also, where they have initiated a coverage on that particular counter. But Indus Towers also holding on to good gains of about 3.5% as we speak. Onto the Nifty index, then you have Bajaj Auto, ITC, Britannia, as well as Tata Consumer, all of them holding on to good strength in today's trading session. But on the flip side, if you look at the losing end of the markets, you have Adani Enterprises that's reversed the course. At one point in time, it was trading higher by about 1.5%. Right now, it's down about 2% in trade. Tata Motors, UBS has come out with a note which is anti-consensus sell call on Tata Motors, and on back of that, you have Tata Motors that's declining about 1.9% in trade. Hindalco reacting to earnings, Mahindra & Mahindra, IndusInd Bank also seeing some sort of losses in today's trading session. Talking about the sectoral indices and what they're doing in trade today, you have Realty Index that is bucking the trend. It is trading higher by about 0.8%. You have FMCG Index also holding on to good gains of about 0.6% as we speak. On the flip side is the Metal Index that's under pressure for a second consecutive session. You have Metal Index that's down about 0.8% as we speak. We'll talk greater detail what exactly is happening in the metal sector and what should you do in that space. Also, you have PSU Bank that is declining in trade, and add to that list IT Index. So these are the stocks and the sectors that are and how they are moving at this point in time in trade today, Shrishti.
Well, yes, but we were talking about the metal sectors and they are in focus after the global metal prices on LME declined for the third consecutive day. My colleague Ashesha is here to tell us more on that front. Take it away, Ashesha.
Well, yes, metal prices have been under pressure for the last many trading sessions. In fact, on London Metal Exchange, zinc prices have declined nearly 7% in the last 3 trading sessions alone. Apart from that, aluminium, copper and lead prices have also declined anywhere between 2 to 4% this week. Important to note that steel, the ferrous space, has been spared to some extent. That too is declining, but with a cut of little over 0.5%. One of the primary reasons is, of course, the concerns that we are seeing in an uptick in Chinese demand. Construction and property demand, which usually picks up in second quarter, has not picked up to the extent anticipated this year, and that is the reason Chinese market continues to be under pressure as far as demand is concerned. Let's also talk about some non-China specific global factors then. Concerns of an impending recession, rising dollar index, rising interest rates in any case are a negative for the global metal space. Important to note that as far as output cuts are concerned, China did undertake steel output cuts last year, and there are chances that it probably could undertake output cuts this year as well. Iron ore is the main raw material required for manufacturing of steel, and hence output cut for steel is a negative for iron ore as well. So the primary reason of the fall in metal prices that we have seen is, of course, concerns over Chinese demand, followed by global recession fears in the overall economy.
All right, thank you so much for that, Ashesha. Also, welcome back, and thank you for putting into context what's exactly happening in the entire metal space. But global slowdown concerns and China reopening are actually weighing on the metal sector. That's the word actually coming in from, I believe, from the managing editor of ET Now and ET Now Swadesh, Nikunj Dalmia. Let's hear exactly what he had to say on the entire metal pack.
See, you can divide the metal into two parts, ferrous and non-ferrous. While the non-ferrous part is certainly losing some sheen, you could talk about the China effect here, or the fact that the dollar index is is making a comeback. It is now marching towards 104. But yes, metal stocks, because of global slowdown concerns, what's happening in China in terms of demand reopening slightly weak, or the demand assumptions given the way how US economy is moving, I think all of them are having impact on the metal prices per se. The copper, which is also referred to as Dr. Copper, is a lead indicator of which way the industrial demand is moving. So industrial demand surely slowing down, and that is having an impact on metal stocks. But in India, you don't have too many non-ferrous stocks. Largely, you've got ferrous stocks. So if you have to pick and choose, I would say go for ferrous, not for non-ferrous. Within non-ferrous, if you look at Vedanta for me, it's a special situation stock. They're giving a lot of dividend. We know the promoters are trying to realign their capital allocation. So that is like a judgment call, but I'm not too excited about Vedanta purely because of the capital allocation policy. Hindalco, well, Novelis numbers, Hindalco numbers were not that bad, so it becomes a buy on decline. But within the steel space, I guess specialist steel companies and steel converters, I think, have potential to outperform. So look at steel companies which have a very large inward focus rather than external focus. Because in India, the steel prices are decent. In India, the iron ore prices have come down. So steel companies, after a painful 2023, FY23, I think are positioned for better numbers. I think the trick now is buy companies which have high exposure to coal. Coke prices have come down 30 to 40%. So steel companies, they get a lot of, what is the raw material for steel? Coal and iron ore. Iron ore prices have started coming down. Coal prices have already collapsed. So go for steel rather than non-ferrous.
Okay, so that's the take coming in from the managing editor. So go for steel rather than the non-ferrous metals, as well as if we talk about the whole metal pack, although there are global uncertainties, but Indian companies are still holding that resilience. So let's understand how our chartist as well as a fundamental expert looking at all these metal counters. Onto the show, we have Kunal Bothra as well as Sharmila Joshi joining us today this morning. Hi, very good morning to both of you, and thank you so much for giving us your time. Sharmila, firstly, what's your take on these metal companies? Because we believe that because the metal index has a constituent of Adani Enterprise, and in the past 3-4 sessions that has seen an uptick on the back of the move in this particular stock, that is Adani Enterprise. But apart from that, all these metal counters have been an underperformer. Going ahead, any of the stock that you like in the metal pack, and what's your outlook for the whole sector?
Yes, good morning and a very happy birthday to you, Shishti.
Thank you so much, Sharmila.
Coming to metals as a space, I think that I've been listening to the discussion that was going on, and I think that I have to concur that this is one sector which is closely aligned to what is happening with the outlook as well as the prices globally. So even though I think that Indian demand is decent and prices here, whether it is iron or coal, both are conducive. I think two things are sort of negatives for me. One is the fact that the results have been very indifferent this quarter. They've been sort of all over the place. Certain numbers you find that on certain parameters the numbers look okay. On other parameters they've not delivered. Some numbers are outright bad. In some cases you think the demand picture going forward won't be so strong. So I think in a nutshell, there is really no big key takeaway from the numbers as far as I'm concerned. And then if you were to look at the valuation, maybe 6-7 months ago, one could make a strong case for metals as a play from a valuation perspective, because the valuations were at levels which look very attractive from a longer term perspective. Because this is the commodity play that we are talking of, and commodity plays do tend to move in a sort of a PE band, and I think that most of the metal stocks to my mind are now at the higher end of that PE band. So I'm actually very neutral on the sector just now. I'm not recommending us there. but I definitely don't have a buy on any stock.
All right, so that's the take coming in from Sharmila on the metal pack. Kunal, what's your take on the entire metal space? Also, how are the charts looking for metal index? And out of the metal index, which is the one stock that you think can be looked at?
Good morning, Cheryl. Wish you many happy returns of the day, Srishti.
Thank you so much, Kunal.
Stepping a bit late to the studio. But then coming to the discussion on metal pack, so one of the very interesting indicators which has actually played out quite well for metal index is the breakout of the 200 moving average. Now over the last 2 years specifically, we've seen that whenever the metal index breaks below the 200 DMA, the index gets into a phase of multi-month correction, and on the way upside, when the index gets into a breakout, we've seen the index going into a multi-month uptrend, and that pattern has stayed quite well for the metal index. Now, interestingly, this time around, the metal index is nearing a breakout of its 200-day moving average. So, I think one has to be patient over here. Let that confirmation pan out for the metal index. Let it confirm a breakout of its 200 DMA. And
Right, absolutely. Point taken, but Kunal, you yourself actually admitted that you stepped in late and you forgot to put the mic on as well. So we will come back to you on the take on the metal index in a short while from now. But yes, we already got Sharmila's take on the metal index, and flashing on the bottom of your screen, as you can see, that's the FMCG index. That one has hit a record high level in today's trading session. Look at ITC, look at Nestle, look at Britannia. All of them was holding a fort in today's trading session, and that's actually trickling down to the FMCG index. But let's get back on and let's talk about the metal index, Kunal.
Yeah, so I'll start off with the same script. Cheryl, thank you so much for that. Happy birthday, Srishti. Now coming to the metal pack. So the point which I was highlighting is that metal index, they have a very typical observation over the last 2-3 years. We've seen that whenever the index comes closer to its 200-day moving average, a breakdown or a breakout leads to a major uptrend or reversal for the metal index. And the reason why I'm flagging this off is right now the metal index is nearing a breakout of its 200-day moving average. So it's always better to be patient enough, let the confirmation happen, and then go for a buy. From the metal pack, I think JSW Steel and Hindalco would be the top 2 bets on confirmation of this breakout.
Okay, thank you so much, Kunal. Thank you so much, Sharmila. Thank you so much, Cheryl. And thank you so much, many viewers that have started wishing me happy birthday on our WhatsApp conversation. Thank you so much in advance. But with this, we are slipping into a short break. But before we go at the Times Network, we are back with our flagship event, that is India Economic Conclave, which is known to set the stage for driving India's economic agenda. And as we move forward onto the path of integrated equitable development, which is all-inclusive, all-pervasive, universal, and one that strengthens not just the Indian economy, but the global one as well. And to pursue this agenda, the theme for this year is India, the emerging third superpower. IEC will feature the biggest voices from politics, global markets, economy, and corporate world. So get ready to catch all the action here on Times Network.
Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Remember that we are live on Facebook as well as on Twitter. And you can connect to us on the WhatsApp number that's flashing on the top of the screen. Do remember to mention your name, the stock that you're looking to invest in. If you're already invested in, mention the buy price, the quantity, and the time horizon. And also don't forget to wish Srishti a very happy birthday. For that, let me kickstart with all the queries then. And yes, like Srishti mentioned before the break only, that we have a lot of our viewers actually wishing you a very happy birthday, Srishti, isn't it?
Thank you so much. Yes, and even some of the viewers are just messaging happy birthday, not with their queries, and that's so sweet to look at. And thank you, Cheryl, for making this birthday really special. At the start of the show, I was just mentioning that no much of an excitement once you get old, but I think that this excitement is coming back.
That's why I told you tomorrow is when we will talk about the excitement part of it, isn't it? But
surely.
With that, I will give you the honors to kickstart with the queries.
Okay, so let me kickstart, and the first question that I have is coming from Chandrasekhar from Bangalore, and Sharmila, he's holding shares of Dishman Carbogen at a price of 159 rupees, sitting at a huge loss because recently the stock was under tremendous pressure after the results. And what should he do now? Should he look to average this particular counter or exit? What's your advice?
Definitely not average, and maybe you could look to hold for another couple of quarters and then take a call, because there's nothing really encouraging from the numbers. I mean, they were sort of flattish, but little improvement was seen in the numbers. So from that perspective, maybe wait it out for another quarter, but definitely don't add to your position.
This one is coming in from Pratiksha from Muscat. Very happy birthday, Shrishti. And she's holding about Uno Minda with a loss of about 5%. She wants to know whether she should average the stock at the current price, or should she hold on the way she has the positions right now. Kunal, what's your take? 1 year is the horizon.
So you can continue to hold on. I would not suggest an average at current levels. The only catch to the short-term charts is few of the indicators have come back into a below neutral territory. So it's not a bearish territory, but a below neutral territory, which indicates that maybe the stock would consolidate for some more time. So it's always better to buy this, buy or average at the lower end of the consolidation. That could be maybe closer to 520, 515 levels for Uno Minda. So if you happen to see the stock back again at those 515, 520 levels over the next couple of days, that could be a good zone where we look to average.
Okay, Kunal, once again the question is for you. This one is from Satya Veni, and he's a long-term investor and wants an advice in Amara Raja Batteries as well as Praj Industries. Any of these counters you like for a fresh buy at this point?
Well, Praj is a much better bet rather than Amara Raja Battery, because I think that stock has underperformed quite extensively over the last many years. So I'm not sure that whether in terms of chart patterns there is something which has dramatically changed for the stock. The volumes have been a bit dismal even in this leg of uptrend for Amara Raja Battery. Praj Industries has been a proven performer. The stock has done exceptionally well. It's gone through that phase of consolidation or correction in the last 1 year, but I think purely in terms of risk reward as well as the positioning of the stock on the long term charts, it could be an attractive bet.
Okay, this one is coming in from Devendra. He's writing to us from Mysore. MTA Tech purchased at 2350, about 50 shares of this particular counter. Wants to know whether it makes sense to add on some more of MTA Tech in the portfolio. He's been holding this since its IPO. Sharmila, what's your take coming in on MTA Tech?
I think definitely continue to hold what you have, because numbers here have been good and valuations also seem decent. So it's I think a very good stock to continue to hold. So yes, it's a definite hold from my side.
Okay, Sharmila, what's the long-term view on Mazgaon Dock? This question is from Jay Krishnan, and he's holding 150 shares at a price of 664 rupees. What should he do? Continue to hold on to this particular counter, or rather book profits at this point?
What I believe is that you can continue to hold, but in terms of valuations, it's run up quite a bit. And also, yeah, so I think just continue to hold what you have, because numbers are reasonable, but valuations seem to have priced in all the positives for the moment. But you would continue to hold the stock.
Right. This next one is coming in from. This one is coming in from one of our viewers, Ghosh Dada, writing from Delhi. 1300 shares of Adani Enterprises at 1,800 rupees per share. Sharmila, he is seeking your advice on what to do with this counter.
This is with Adani Enterprise.
Yeah, Adani Enterprises. He's purchased 1300 shares at 1800.
So, we've seen this stock go through the troubles that it had, and now it seems to be recovering from that. Also, I think as of yesterday, or is it today, it's been put back in that ASM category, which means that if you want to buy the stock, then you need to, upfront have 50% margin or 100% margin or whatever. So the margin requirements have gone up. So, having the stock having seen a level of 1,000 and having pulled back to this level, I think my sense is that it will spend a little bit of time here. And rightfully it should, because I think that will sort of give you further confidence on, and when you report, you've already reported good numbers, and then you sort of build on that and then take it from there. So my suggestion would be to hold what you have, and definitely I think have your ear on the ground as far as whatever other news developments in the stock. But definitely I think this is not a great price to add fresh stock.
Now the next question is from Philips, and he's holding 400 shares of Bank of Baroda at a price of 174 rupees. Wants to know what could be the probable next 1 year target for this particular counter.
Well, I'm bullish on banks, PSU banks specifically, and I think over the next couple of quarters, maybe these PSU banking stocks could at least surpass their previous highs, which they had hit in 2022. So I think for Bank of Baroda, that level was closer to 196, 198. SBI around 615 or 620 odd mark. And I think, and so is the case with many of the other PSU banking names. So from a 1 year perspective, you can look at it as a staggered manner that maybe closer to 200, 215 could be a potential target range for which you can keep for Bank of Baroda. So the more it keeps on crossing those psychological levels of 200 approximately, the you trail your stop losses much higher than your current market price or your current buy price. So I think that's a better strategy for Bank of Baroda.
All right, so that's a strategy to adopt for Bank of Baroda. But on that note, we slip into a break on this edition of Buy Now Sell Now. When we come back, we'll continue taking all of your stock-related queries, so don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now, a show where we answer all of your stock-related queries. And this is one of the shows which has the maximum viewer interaction. But I must thank all of our viewers because week after week, you've made sure that ET Now stands number one. It is the most watched English business news channel in the country of India. So yes, thank you so much, viewers, for reposing faith in us. And yes, week after week, we'll make sure that we deliver the most accurate, the most integral and most important stories to you with no biases involved. So yes, thank you once again to all of our viewers, Srishti.
Well, yes, that's a great news, and every Thursday we get to see that number, Cheryl, and once again, you are the winners there.
Absolutely. With that, but let's continue interacting with our viewers and taking all of your queries then. And the next query that I have is coming in from Bisaka from Kolkata. And Bisaka is a long-term investor with a vision of 3 years. She has Saxoft 100 shares at a price of 102 rupees per share, and Indore Mines price of around 94 rupees per share, 100 shares of that as well. Sharmila, given the fact that she is a long-term investor with a 3-year vision, what should her strategy be in both of these counters, Saxoft as well as Indore Mines?
So coming first to Saxoft, in terms of valuation, this is not a stock that I track very closely, but in terms of valuation, it seems to be fairly the valuation seems to be fairly high. But overall, I think it's a fairly decent stock, so you could continue to hold. Which is the other stock? I'm afraid I missed that. Indore Mines.
Moving on to the next question, and Sharmila, once again. Okay, Sharmila, the next stock was Indore Mines. Any advice on this one?
Oh no, I'm sorry, I don't track this.
Okay, moving on to the next question then. Sharmila, the next question is from Kabir Bedi, a stock which we don't talk about much, that is KP Energies. He has bought 500 shares at a price of 186 rupees. Wants to know a short-term target on this one. Would you be able to advise him?
A short-term target I would not be able to give.
Okay, Kunal, any advice on this one?
Well, I don't track the stock, so I'll skip this one.
Okay. Cheryl, would you like to take next
All
one?
right, this next one that I have is coming in from Akhil. He's writing to us from Delhi. And Kunal, this one is for you. He wants to know, is it a right time to invest in Tata Motors for the long term? And his long term is 3 to 4 periods. And how do you see the Tata Motors stock doing for the next 3 to 4 years? I'll take this question directly to Sharmila, because given the fact 3 to 4 years, what's your take coming in on Tata Motors? Today you had UBS that came up with an anti-consensus sell call on this particular company, saying that the product pipeline doesn't look that exciting for Tata Motors as passenger vehicle segment. What's your take on Tata Motors for the next 3 to 4 years? Do you think that this will still stand out and be a winner?
I also took a look at that report, and I think that what they were trying to suggest is that the current price seems to be factoring all the positives, and maybe they could be right about that, because we've heard about their EV plans for Jaguar Land Rover. That's like a 4 or 5 year plan. We don't know how that's going to pan out. There were bits and pieces which sort of seem to suggest that everything that the street is already factoring in a lot of positives in the current price, which could be true. But we have an investor who's looking at the next 3 or 4 years, and I think from that perspective, for me, Tata Motors will continue to be a hold. Simply because I think this last quarter we did see a sort of a turnaround number from there, And coming to that EV bit, in the Indian context, the EV bit has worked really well for them, and perhaps looking at how that has progressed as well as what the situation globally is, because there the EV sort of market has now sort of stabilized, and they can see perhaps trends of how you could see sales panning out in that context, where Jaguar Land Rover is the piece that we are talking of. So then after having seen that, they've I think put out their plans, and those plans are very ambitious. So if you want to take advantage of the positives that could come out from the rollout of that, you do need to be invested for the next 4 or 5 years. So I think from that perspective, the timeline that the investor has in mind is fine. So I would say it's a hold.
Okay, that's a hold on Tata Motors. But Kunal, coming to you for the next one. The question is from Ashwin, and he has bought two large cap names, but at some higher levels. First is L&T, entered at a level of around 2,300, and the other one is HAL from a price of 3,100, sitting at a small loss right now. So any advice to average out these counters, and what's the outlook ahead?
Well, wait out for some more correction. I would say that because both these stocks are now coming closer to their respective key moving averages. L&T, for example, is coming closer to its 200-day moving average. HAL is also trying to touch back towards its 50-day moving average. So, for example, HAL, the level of 50-day moving average is around 2,800, 2,840 levels, and for L&T, that level is approximately 2,100 on the spot level. So I think you should wait out for maybe some more time. Let these stocks come back to their respective key moving averages, and that's where I think you can look for a contra buy or maybe an add from your on your existing holdings.
All right, this one is coming from Balan. He is talking about, or he's asking his query on Cochin Shipyard, which he's purchased at 505 rupees per share, and the next one is Salzer Electronics at a price of around 310 rupees per share. Sharmila, he wants to know whether he should hold on to both of these counters or look to switch out of one of them, or switch out from both of it and shift his position in IT or a banking sector.
So the performance for Cochin Shipyard in this last quarter hasn't been that great, and perhaps the stock has corrected because of that. So I don't know what level he's bought Cochin Shipyard at, because maybe that could be some cause for concern, because the stock has had a big run up and the valuation seem rich. So if you want to stay invested in that, it's a decent stock, but I think it's just run up too fast and the numbers were not that great. So I don't see it recovering in a hurry. Having said that, I think it's a decent stock, and we should let it settle a bit and then take a call from there. The other stock is Salzer Electronics, right?
Salzer Electronics.
Yeah. Here again, I think the valuations are very rich, but numbers have been, I think, okay. So here again, my view would be a little neutral. So yeah, I think continue to hold, but definitely not a fresh buy.
Okay, Sharmila, you gave your take on Tata Motors, but what's the outlook on Ashok Leyland? Mahesh from Delhi has bought 300 shares at a price of 153 rupees, and after the results, the stock is under pressure, though the results were not that weak also, but the stock is under pressure. So is that a hold or sell at this time?
So I think some kind of pre-positioning had happened before the numbers, because I remember seeing this stock at about 139, 140 levels, and then it went up to that 153, 154 level. Because according to me, the numbers were very good, and this is a stock that I like, and I look at this as a sort of a sell-off on good news sort of a scenario, and I definitely have higher targets on Ashok Leyland. So for me, it's a clear hold.
Coming from RLK Rao, he's writing to us from Hyderabad, and Kunal, he wants to know why is HDFC Bank seeing such a huge fall from about 1693 levels or so. I believe that's where he's holding or looking to hold or buy some more of HDFC Bank. He's asking how does the charts look for HDFC Bank in the future, that's in the month of June. If you could give some indications of how you see HDFC Bank moving, and will it cross at least 1650 in the month of June, should he look to buy?
Well, 1650 is not far enough. It's just, I think, 2%, 2.5% or 3% away from the current levels for HDFC Bank. But then I think the concern for the stock, which which is acting as a bit of a hindrance to the stock price trend, is those news flows which keep on coming for HDFC and HDFC Bank every now and then. I think last couple of weeks back, there was the MACI news flow which for the stock, and at a point when the stock delivered great results, from there you saw the stock selling from 1720 odd levels to now almost on the verge of breaking below the 1600 mark. So there is this constant news flow which is impacting the stock price trend. Ideally, in such kind of a scenario, we wait out for the stock to complete its mean reversion. So I think in this case, maybe a 200 moving average could be retested for HDFC Bank. That's around 1570, 1575 mark for HDFC Bank. So I'll wait out for another 25-30 points correction, and if the selling settles at that range, that's where we may go for a contra buy.
Okay, moving on to the next one. Sharmila, the question is from Hemant, and he has bought Syrma SGS 67 shares at a price of 243 rupees. The stock has been showing good momentum in the recent past. So is this a good time to book profits in this one?
So again, a stock that I've never tracked.
Okay, no worries. Kunal, anything on the charts? Don't have much data, but the stock has given a breakout recently.
Yeah, so breakout recently, Syrma SGS, Keynes, and many of the other stock have given very good up move for themselves. But the point is that you should not be looking to buy these stocks at the peak of momentum, especially at a time when the markets have started to get into a risk-off mode. So wait out for that odd phase of correction. There's bound to be a correction which should come back into these names after such a kind of a steep rally, because there could be a pressure of profit booking or mark to market for many traders, investors into the market, and that could probably put pressure into these stocks over the near term. So wait out for a correction, be patient enough, no need to buy in a hurry, as well as buying at the peak of momentum.
All right, on that note, actually we slip into a break on this edition of Buy Now, Sell Now. But viewers, remember, we at Times Network are back with our flagship event, that's India Economic Conclave, which is known to set the stage for driving India's economic agenda. And as we move forward on the path of integrated equitable development, which is all-inclusive, all-pervasive, universal, and one that strengthens not just the Indian economy, but the global one as well. And to pursue this agenda, the theme for this year is India, the emerging third superpower. IEC will feature the biggest voices from politics to global markets, economy, as well as the corporate world. So get ready to catch all the action here on Times Network. Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking your queries then. And this next one is coming from Vadivu from Tamil Nadu. And he's purchased DLF 2500 shares, Kunal, at a price of 415 rupees per share. He wants to know whether he should continue to hold on to it or look to exit this particular counter.
See, if you're a long-term investor and you're okay with high risk or high beta stocks like DLF, only then I think you should continue to look to hold on, because the real estate sector has made a very strong, dramatic comeback for itself. DLF has been one of the high beta names, more prominent names from the entire real estate pack. The chart patterns are still looking very positive, but it's just that with every phase of the market volatility, stocks like DLF, the high beta names, they could get into those odd phases of 10%, 15% correction, and that could probably dampen the short-term charts. So it all depends on the framework of your portfolio as well as your risk appetite. From a long-term play, I would be bullish on DLF and would suggest a hold. But from a short-term play, if you're making 15% kind of a profits at current levels, then you can always look to book profits and then buy back on corrections for DLF.
Okay, moving on. And Sharmila, do you track Jamuna Autos? Chandrasekhar has bought 1,000 shares at a price of 110, and he wants to know the medium-term outlook on this one.
I think he can continue to hold. Valuations seem reasonable and results are also okay. I don't think the stock will go up in a hurry, but I think he can continue to hold what he has.
Okay, this one is coming in from Puneet from Delhi. Kunal, he has Piramal Enterprises 770 call, June expiry, buy price is 40.5. Also Chola Finance call option 1,150, which is for June expiry at 10.15. What should he do for both?
So you can continue to hold on for both of these stocks. In fact, Chola Finance has been an outperformer, has done pretty well for itself. But the only concern with Piramal Enterprise, when I look at the charts on spot levels, is the inconsistency of the stock to provide a breakout and a follow through. So I think 2 days back or 3 days back, the stock was almost on the verge of breaking past about 770 levels. It did that on an intraday basis, but then failed to show signs of a convincing breakout. That's the only concern, that the waiting period for the stock to break past about the previous resistances. So I think if that is taken out, then I believe that maybe the charts on the near term could look very attractive for Piramal Enterprise as well.
Okay, moving on, and with this, viewers, let's kickstart taking all your questions in the rapid fire session. And the first question that I have, Kunal, is for you from Dr. Gupesh, and he's holding shares of IDFC First Bank, 2,600 shares at a price of 67 rupees. What could be the near-term target for this one?
Well, I think you should look to hold on to it for at least another couple of years. I believe the stock has confirmed a very strong breakout. Looks very attractive.
Okay, this one's from Karthik from Tirupur. He's a long-term investor. He wants to know what's the outlook for DCB Bank, RBL and Barmer Lorry. Either one of them, Sharmila?
DCB Bank and which was the other?
RBL Bank and Barmer Lorry.
So DCB Bank I like among all these three. I think RBL Bank is also Barmer Lorry. I'm sorry, I don't have.
Okay, Kunal, what's your take on L&T Finance? Abhijit has bought shares at a price of close to 100 rupees, and how the short-term charts looking like, and any targets?
Hold for a short-term target of at least 108 for L&T Finance.
All right. Kunal, another one your way, Metro Brands for the short term of 3 months. Can Padma Siva Rao look to buy it?
Well, not at current levels. Wait out for a correction till at least 900 for you when you're looking to buy this with a time frame.
Okay, Kunal, what's your advice on Tube Investments? Krish is looking to add this one in his portfolio, and how the charts looking like for this one?
Weekly charts are a bit negative. It's formed a dark cloud cover. I would expect a correction towards 750. That's a good level to buy.
Okay, Sukesh from Kochi is asking about a stock he spoke this morning, Tata Communications, 100 shares at price of 1310 rupees per share. What's the short-term outlook for this one, Kunal?
Looks attractive. 1225, 1230 could be a level where you can look to average.
Okay, Sharmila, Lester Joseph De Cruz has bought 2,300 shares of Z Entertainment at a price of 270 rupees. Any hopes on recovery on this one?
Very honestly, I'm not positive on GEC as a space. Numbers are today, so you can take a look at the numbers and decide whether you want to continue to hold. But overall, as I said, I'm not positive on GEC as a space.
Okay, this one is coming from Ravi. He's writing to us from Bangalore. Sharmila, he's a long-term investor. He wants to know whether he should enter Aavas Financiers right now.
It's a good stock. I don't know about right now. If he's long-term, yes, he could.
Okay, but with this, viewers, it's time's up on the rapid fire session, as well as taking all your stock related queries onto the show. With this, we'd like to thank Sharmila and Kunal for giving us your time, and thank you all the viewers for your wishes all throughout the show. Well, let's move on and let's focus on some of the earnings. And we had the numbers coming in from Anthony Waste Handling, which reported a bit of a weak set of numbers this time around, where the profit has seen a drop of 52% on a YY basis. The margins have shrunk. So let's understand from the management that what is the outlook going ahead, though the stock is holding itself in green right now. Onto the show, we have Iyer Subramaniam, who is the Chief Financial Officer of the company. Hi, very good morning, and thank you so much for joining us today on ET Now. There have been a lot of market rumors related to the IT rate. So let me start this question, the first question on this one, because the stock was also down around 10% in the trade on the back of the same news. Can you just clear the air and give us some perspective on that?
Definitely. So the income tax surge and nothing to do with the company's operations. The income tax authority had certain complaints about certain vendors who are also providing services to the company. The transactions with these vendors from the companies and has been completely transparent. All the payments have been were in RTGS and TDS have been deducted. Now, these vendors have not been filing their own personal tax returns. So that is one of the reasons why the income tax authority had raised questions with those vendors. And since they were also parties which the company and other companies had worked with, they had asked for the ledger copies from the company's end. We have completely complied with all the requirements. The details have been shared. The bank statements have been given to the authorities. Till now, we have not heard from the income tax authority on any of these details yet. But these have been done for all genuine purposes for the collection and transportation of municipal solid waste in the city of Delhi.
All right. So if you could just clarify to us, because your auditors have definitely raised the concerns about the receivables and recoverability of the receivables. I stand corrected. The amount stands around 8 crore rupees. Is the entire amount recoverable, and how much have you received so far? Just to clarify on that particular front.
Yeah. So if you look at 8 crores, that's like less than 1% of my total outstanding and total annual revenue per se. So this is a very minuscule amount. Of the 8 crores, we have started receiving around 5% of the money, because these are all government dues. So this takes time. There are certain legal cases which the company has already won in the Bombay High Court, and some matters are in the Supreme Court. where the gains from these contracts are to the tune of 16 crores. So what is outstanding in my books is just 8 crores. I've already bagged arbitration wins to the tune of 16 crores. So once the money gets realized, the entire 8 crores gets wiped out. Again, to put things into perspective, 8 crores is just 1% of my annual revenue. It's something to do with the legacy issue, and these are all pre-2015.
Subramaniam, now let's talk about your earnings, because your margins were down, and one of the reasons was the higher other expenses. What was this owing to, and was there some provisioning in this quarter as well?
There are two factors which kind of weighed on the margins, just not the other expenses component. It's also we didn't recognize revenue from reimbursement of minimum wage and also the escalations. A lot of municipal corporations still don't have elected members, so certain regulatory and regular work is not getting done. So the company, being prudent, has not recognized the reimbursement, which needs an elected body to approve these bills. So these were supposed to add it to my revenue. I already paid these expenses, so the expenses sits in my other expenses book. Other part of the other expenses is also the higher transportation costs related to my refuse derived fuel transportation. So if you were to add the reimbursement amount and the escalation amount, which I've not booked in the last year and the last quarter, my total EBITDA would actually be significantly higher. It would be around 187 crores versus 163 crores that I'm reporting. Margins would have been 22% as against 19% that I'm saying today. So this is just following that once the elected members join the board, they approve the bills, then I will get this money. So since those people are not yet been elected, maybe in the cities of Nagpur or Bombay, Thane, these are the cities where the corporations are still not elected. So once these people come in on board, the general body gets formulated, we will get our dues realized.
Right. Let's talk about then the year ahead. If you could quickly summarize and tell us what could be the growth drivers for your company in the year ahead, as FY24. Any revenue growth guidance, EBITDA guidance that you can provide to us?
So for us, I mean, it's like a very organic growth. Put in around a 10 to 15% core organic growth is something that we can definitely deliver based on the contracts that we're already bagged and executing. Our total order book position as of today is around 7,800 crores spread over the next 7 to 10 years. So that gives us a lot of revenue visibility. And this is like an annuity model. So the kind of contracts that we have is almost like a monopoly in those particular cities. So on a chug-along basis, a 15% core operating growth is something that we can definitely and would like to achieve. EBITDA margin should be in the range of around 22 to 24% at console level. We are definitely trying to kind of control the cost. Transportation is one area that we are definitely looking at. But 22% EBITDA is something that we should be looking to deliver over the next 12 to 18 months comfortably. The other big driver would be our commencement of operation of the waste to energy project in the Pimpri-Chinchwad area. So that would also add to the top line and also have a significant contribution on the EBITDA side.
With this, Mr. Subramaniam, thank you so much for joining us today on ET Now and helping with the future growth guidance of the company, and wishing you all the best for the results ahead. But with this, viewers, it's time to wrap this edition of Buy Now, Sell Now. It's a goodbye from me and Cheryl and the entire team who put the show together. Thank you so much for tuning in.